So are we live? Let me check. Are we live? Hello, hello. So are we live? Are we live? Are we live? Let us check. Are we live? Hello, hello everyone. Let me know. Are we live? Hello. Let me check. Hello, hello. All right. So hello everyone and welcome back to a very exciting session where we would be studying the functions of RBI. This is your friend and host CA Ishaan Gupta. Let me welcome you to another exciting session. The last session that we conducted on functions of RBI was just a second. The last session that we conducted on functions of RBI covered various monetary functions of RBI, and in this session today we are going to discuss further about what are the functions of RBI. So welcome everyone. Let us begin our session today. So in the last session we discussed what is the syllabus for finance and what are the different financial regulatory bodies in India such as RBI, SEBI, IRDI, etc. etc. So there are many regulatory bodies, and there was a brief history as to how the regulatory bodies came into existence, or why we require the regulatory bodies. So there was this Great Depression that happened in 1929, and after that certain regulatory bodies started to come into existence all around the world. So all this, there was a brief history of Reserve Bank of India as to how Reserve Bank of India came into existence and how it was introduced by the Hilton Young Commission, and later on it was the headquarters was located in Calcutta. Later it was shifted to Mumbai, and how it was nationalized, that is when the private company or the private ownership is transferred to the government, it is known as nationalization. So how it was nationalized, the year of establishment, a brief history about Reserve Bank of India, who owns the Reserve Bank of India we are talking about over here. It is owned by the Union Ministry of Finance. What are the objectives? We studied various objectives of Reserve Bank of India in the last session, the various head offices where they are located, what is the structure of Reserve Bank of India. All this had been covered in the last session. In fact, we had also covered the monetary functions of Reserve Bank of India in the last session. Let me just recap in a brief manner so that we are able to recall as to what all were the points that were associated. For example, the monetary authority. So ultimately Reserve Bank of India is the major monetary authority while it comes to the decision making. That is, all notes are being printed by RBI, and the monetary authority also here means that the inflation targeting concept was being introduced over here. The issuer of bank notes. So we mentioned that all notes are printed by, controlled by, the money supply is controlled by what? The Reserve Bank of India. The exceptions were there, such as 1 rupee note and coins, which are being controlled by the government through Ministry of Finance. Then it was the banker to the government. There was another monetary function, the banker to the government. Just like we have our own banks, the government also, the banking functions of government is being performed by Reserve Bank of India. Bankers Bank, it is a lender of last resort, it maintains the CRR, cash reserve ratio, etc. There were many such points that were covered over here. Lender of last resorts, controller of credit or money supply, and manager of foreign exchange. These were also the points, certain points that were covered already in the last session. Now let us begin the fresh start for today's session through what are the general functions of Reserve Bank of India. What are the just one second. What are the, let me erase this. What are the general functions of Reserve Bank of India? So when we are talking about general functions, apart from not only monetary functions, there are certain general functions which are also performed. These are regulator of banks. Ultimately, it regulates, it manages it supervises the banks. The Reserve Bank of India Act 1934 and the Banking Regulation Act 1949, all both these acts should be read together. दोनों एक्ट्स को इकट्ठे पढ़ने, मतलब दोनों अलग अलग चीजें नहीं हैं. Both the acts, law is different, but ultimately how they are overlapping and how they are governing, helping in the governing of banking system in India needs to be read together. Give the RBI the authority to regulate banks in India, such as issuing licenses to banks. Recently you must have gone through the current affairs where certain licenses of the banks were in jeopardy. The cooperative banks, other banks, you know, there are various norms or notifications or clarifications that are being issued. कुछ केसेस में तो इस तरीके से भी था, पेनल्टी भी लगाई गई थी. पेनल्टीज आर ऑल्सो इम्पोज्ड इफ the banks do not follow the guidelines issued by guidelines issued by the Reserve Bank of India. Setting minimum requirements of paid up capital and reserves. So ultimately all the minimum reserves that the banks need to maintain, all the notifications that they need to follow, the regulatory frameworks that they need to follow. So many a times it has been seen that RBI imposes penalties, or it can also lead to, if for example RBI is issuing warnings to the commercial banks as to they need to follow certain guidelines. If they do not follow, it can lead to imposition of penalties. If still they do not follow such guidelines, it can lead to cancellation of licenses of the banks. So ultimately it is the regulator. Reserve Bank of India is the regulator of banks. Then RBI performs the promotional functions. What is the promotional functions? For example, you might be knowing about NABARD. This is also the entrances that we are conducting, NABARD. So what is NABARD? NABARD ultimately is the topmost institution that deals with what? That deals with the development of agriculture and rural based areas. Agriculture and rural development. So what does NABARD deal with? The agriculture and rural development. So ultimately the promotion of agriculture areas is being handed to what? To NABARD. NABARD को भाई इस तरीके से किया कि NABARD को एक काम पकड़ा दिया कि भाई आपको एग्रीकल्चर, दैट यू हैव टू प्रमोट एग्रीकल्चर एंड रूरल डेवलपमेंट, इट इज अंडर NABARD ओनली. एंड हु इज अल्टीमेटली प्रोवाइडिंग द फाइनेंस? RBI. You know, so RBI has made very different organizations under it, and these organizations perform various functions. For example, NABARD. So RBI provides finance to NABARD, and ultimately NABARD looks after the agriculture and rural area of the economy. So there are various other areas also where Reserve Bank of India leads to promotional activities. For example, RBI has developed security systems for online payments, that is through UPI. You must have heard of it, UPI. So ultimately what is RBI doing? RBI is promoting what? It is promoting online payment mechanisms. RBI, the government, central government, what they want is they want more payment should be made through online mechanisms, through banking channels, so that they can curb the black money. So promotional functions, the RBI promotes the Indian financial system through various initiatives such as facilitating the expansion of commercial banks branches domestically and internationally. So ultimately now what RBI does is, RBI, or in general there is a perception now, the perception is that banking habits should be promoted, banking habits should be ultimately promoted with the general public. For this, the RBI has performed that expansion of commercial banks, and their branches should be established in various areas, encouraging banking habits among the people. So banking habits should be encouraged. For example, you might have heard of the scheme known as Sukanya Samriddhi Yojana, or you must have heard the scheme of Jan Dhan Yojana. So all these yojanas, for example Sukanya Samriddhi Yojana, where you deposit money with the bank and for a girl child, this scheme Sukanya Samriddhi Yojana is for a girl child. So if you have a girl child at home and she is under the age of 18 years, then you can open this account, you can deposit money in her name, and once she turns 18, she will get the entire money along with interest, which is tax free. So what this does is this encourages the banking habits. Online payments, as I'm talking about UPI, it also encourages the banking habits with people. You know, before 2016, let me just give you a certain example. This is also covered in your current affairs. That is the UPI payments, UPI payments, how the Reserve Bank of India is taking action in encouraging more UPI payments. Already UPI payments or online payments, all this technology is giving a massive, you know, head to head, ekdam takkar de rahe hain world ko in the sense of online payments. So encouraging banking habits among people, so through these yojanas, promoting financial inclusions, educating and protecting consumers. You must have heard that various educational campaigns are also run कि गलत पेमेंट मत कर देना, properly you need to check the person who you are sending the payment. Supporting digital India initiatives in the financial sector also. For example, this is again, I am telling you, this is from your current affairs also, that the Reserve Bank of India along with SEBI are leading to what? Are leading to certain, you know, there are certain developments that are taking place where UPI would be allowed for or would have more autonomy in the stock exchange market, secondary market, what they call it. So how this can be done? Supporting digital India. More online payments need to be performed. Next, minimum reserve for RBI. So what is minimum reserve? Let me explain you through a simple, let me try to explain you through a simple example. So minimum reserve, what happens is, let me explain. So imagine this is the balance sheet of what? This is the balance sheet of Reserve Bank of India. This is the balance sheet of Reserve Bank of India. Earlier what used to happen is, Reserve Bank of India had to put gold reserves over here, which acted as assets for the Reserve Bank of India. For example, they are putting over here 200 crore rupees worth of gold. तो RBI क्या कर रहा है? अपने पास 200 करोड़ का गोल्ड रख रहा है. It is assets for the Reserve Bank of India, and against such assets they are issuing liabilities or debt. That is, they are printing money. They are what? Printing money. So earlier what used to happen is, before 1957 we are talking about. So before 1957 what used to happen is that only the amount of gold reserves or certain securities that you are keeping, the RBI is keeping, it was allowed to keep equivalent amount, it was allowed to print equivalent amount of notes. So what happened is, ultimately the note or the currency derived its value from the gold reserves. Slowly and steadily, the government, the RBI, Reserve Bank of India, shifted its policy to minimum reserves. So under minimum reserve, what happens is they have to keep a certain minimum amount of gold reserves or gold as assets with them, and they can print multiples of currency as compared to the gold reserves. So this is known as minimum gold standard, minimum reserve system that is followed by Reserve Bank of India. तो आज के टाइम पे हो क्या रहा है भाई, 200 करोड़ का गोल्ड रखा है, एक मिनिमम, they have to keep minimum amount of gold, and ultimately printing of money is done in multiples. Due to this only, you can see in the economy inflation is being generated. So this is a small concept that is introduced over here. The Reserve Bank of India implements the minimum reserve system for issuing currency notes. Under this system, Reserve Bank of India must hold gold and foreign currency reserves worth 200 crores as backup. So minimum reserve, what they are talking about here is that they have to keep 200 crore rupees worth of not only gold but foreign exchange also. It is allowed. And multiples of notes can be printed. So people ask, how is the printing of money a liability for the Reserve Bank of India? Yes, this is a liability. If you ever see any note printed by Reserve Bank of India, that is all notes are printed by Reserve Bank of India except for 1 rupee note. If you check it carefully, it is written over there that I guarantee to pay the bearer of this a certain sum, for example 500 rupees, and there is sign of the Governor of Reserve Bank of India over there. You are understanding what I am trying to say? So basically the RBI is providing a guarantee, and guarantee ultimately leads to what? It leads to liability. So under this system, the Reserve Bank of India must hold gold and foreign currency reserves worth 200 crores as backup. Of this reserve, at least 115 crore must be in gold. Next, what are the different publications that are introduced, that are being introduced by Reserve Bank of India? These are Financial Stability Report, the monetary policies, ultimately what monetary policy, whether inflation rates, whether the inflation rates are within the target range or not. As you mentioned in the last session also, there is a target range that is set. For example, if it is 4%, the target range is between 6% and 2%, and the inflation, if it is between this category, it is stable. So monetary policies reports are being generated through this. The RBI issues such publications on this, and accordingly RBI sets the repo rates. It increases the repo rate, decreases the repo rate. All these policies, what they are trying to decide, what they are trying to do is mentioned through these publications. Report on financial reviews, RBI annual reports are there, trends and progress of banking in India, consumer confidence survey, etc., etc. Let me share with you a simple example on this again. Let me share with you a simple example on this. For example, in India, the demonetization last that took place is in 2016. The demonetization took place. So what was demonetization? The old 500 and 1000 rupee notes were ultimately banned. They lost their legal validity, you can say. They were ultimately equivalent to paper, the tissue papers that we use. So in 2016, the last demonetization for 500 and 1000 rupees took place. In fact, there was another event, I guess so, it was last year in 2023, I guess so. Correct me if I am wrong, in 2023, that the 2000 rupee notes also lost their legal validity. You can say in 2023, 2000 rupees also lost their legal validity. So as I remember, in 2016, when the demonetization took place, there were surveys after which the Reserve Bank of India issued publications telling how much money that was circulating in the economy came back, how much money that was circulating in the economy did not come back, that was black money, how it affected the economy, the slowdown in the GDP numbers were there. So there are various publications issued by RBI, there are various quarterly publications, yearly, that is annual reports are there, and certain there are other publications also which RBI continuously offers. So what is ultimately the income of Reserve Bank of India and what are the expenditures? So what is, in simple terms, what is the income? What is the meaning of income? Income means the ultimately earning of money or the money coming in for the institution, and expenditures are on what grounds they are expending. Aaya paisa, that is income, aana hai, that is coming of money, and expenditure is for running the organization where all you have to put in that money. So how does the Reserve Bank of India earn its income? The Reserve Bank of India's income primarily comes from its activities in financial markets. So the primary source of income is through its activities or its participation in financial markets. These financial markets can be equity markets, debt markets, government related markets, etc. So what is the first point is income from buying or selling of foreign exchange. Foreign exchange meaning the foreign currencies, that is US dollar, which is known as the reserve currency in today's scenario. आज के टाइम पे US डॉलर रिजर्व करेंसी है. रिजर्व करेंसी का मतलब क्या हुआ? It is the most powerful or widely accepted currency in the world. So by buying and selling, such activities can generate a surplus or income for Reserve Bank of India. The incomes from open market operations to manage the rupee's value. What is open market operation? It is, in simple terms, it is buying and selling of currencies, securities, usually government securities. So Reserve Bank of India, as we read the function of RBI, let us come back just 1 or 2 slides. There was a function of RBI, that is, it is the banker to the government. Remember in the last session we studied about it is the banker to the government. So ultimately you can see it buys and sells government securities on behalf of the government. This is what we studied a few lectures back. So this is ultimately what is open market operation, that is buying of securities, selling of securities. Let me elaborate this. For example, there is a market. What is a market? In simple terms, अपने घर के आसपास की कोई भी मार्केट उठा लो जहाँ पे आप सामान खरीदने जाते हो और सामने वाला बेच रहा होता है. There is a buyer and there is a seller for this. There is a buyer and there is a seller for some product in the market. जिसमें को सब्जी खरीदनी है, पास में से खरीद लूँगा. खरीदने वाला, there is a buyer and there is a seller to it. Similarly, there are various markets. Various markets, for example, the famous one you must have heard, that is the stock market, where shares are purchased, bought and sold in the market. That is the most simple example of stock market. There are other similar markets also. For example, debt market. For example, there is a market for government securities. There is a market for what? Government securities, where buying and selling of what? Government securities take place. Even you and I can also invest in such government securities. So on behalf of the government, who is buying and selling the government securities? RBI is supposed to perform this function. Hence it is the function of RBI. Hence it is the banker to the government. Hopefully you can connect the dots. This is ultimately, let me come back to the slide. This is the open market operation. It also helps in managing the rupee value. Income from the government securities it holds. Ultimately, if the RBI is holding the government securities, it will generate interest for the Reserve Bank of India, which will act as the income. If I have purchased the government security, for example, this is RBI. I have purchased a security of government. Government will now pay the security holder, that is RBI, in this case me, interest. This is also an income. Returns from foreign currency assets invested in bonds of foreign central banks or top rated securities. What RBI can also do is that it can invest in the bonds or currencies or financial assets that are foreign in nature of other central banks or other governments also, which are which have a very good liquidity and a very good rating also. So returns from such foreign currency assets, that is, you can in simple terms put it, the bonds, the securities, in simple terms the securities / bonds of foreign, that is not Indian, outsiders, is ultimately invested into by the Reserve Bank. The Reserve Bank can invest in this also. It will also generate returns. Returns from deposit with other central banks or the banks for international settlements. So there are returns from ultimately there are various requirements where RBI has to keep certain deposits with international organizations or the central banks of other countries. So the returns they are generating from there also. Incomes from short-term lending to the banks. There was a function related to that. Let me again connect the dots. Let me take you back to certain slides. For example, Bankers Bank, very interesting. So what is Bankers Bank? Just like we go to, this is me, that is public. Just like I go to bank to take a loan and I pay interest to the bank. So imagine that you are going to a commercial bank, you are taking loan from the commercial bank and you are paying interest on such loan. So it will act as a what? It will act as a income. It will act as a income for the bank, correct? Similarly, what the Bankers Bank function of RBI says is, similar function is being performed by Reserve Bank of India. The Reserve Bank of India acts as the banking function for the banks. If banks require money, they can take loan from the Reserve Bank of India and they have to pay interest on this. So ultimately this interest is the income of RBI. So if you are connecting the dots, it is coming out very beautifully that the functions of monetary functions are ultimately repeated in some terminology over here. Management commission for handling borrowings of state and central governments. So they can also earn through commissions handling the borrowings of state government, for example the Punjab government, Haryana, UP, or central government, that is the union government, they can earn certain commissions. So now for some instance we have studied about what is the income of Reserve Bank of India. If we subtract the expenditure of the Reserve Bank of India, then it will generate the surplus. It will generate the what? The surplus for Reserve Bank of India. So now we are going to talk about the expenditure side. Right now we were talking about the income side of Reserve Bank of India. Now we are going to talk about the expenditure side of the Reserve Bank of India. So what are the major expenditures of Reserve Bank of India? Major expenses of RBI include cost of printing currency notes. This is one of the major parts of the expenses that are being incurred by Reserve Bank of India, that are the currency notes. Obviously the printing of currency notes require certain expenses, and these are incurred by, again, Reserve Bank of, simple point, nothing major. Salaries of its staff, for example, you are applying for Reserve Bank of India entrances, so ultimately the salaries that you will be getting, it is an expenditure for what? For RBI. Commission to banks for conducting transaction on behalf of the government. So the commissions they have to pay. Banks, RBI, so RBI directs banks, commercial banks, to conduct certain transactions in which on behalf of the government. On behalf of what? On behalf of the government. So the transactions that RBI has to conduct on behalf of the government, and they are directing banks, so ultimately banks charge commission for such transactions. These are also expenditure. Commissions to primary dealers for underwriting government securities. So what is underwriting? What is underwriting? It is a terminology many commerce students might be aware about this term. What is underwriting? So what is underwriting? Let me explain. Whenever there is a, for example, IPO, let me give you the example of IPO. There is a issuer not the sense of Bhagwan, God, no, that is issuer different. This is issuer meaning the person who is issuing the security. So whenever the security is being issued, whenever the securities are being, in simple terms, sold, then there has to be certain subscribers or buyers for such securities. Got it? For example, I am a company. Let me give you an example through a company's perspective. If I am a company and I am selling securities, there has to be certain buyers for such securities. Many a times it is seen that certain securities, there are no subscribers or there are no buyers for certain securities. In that case, the entire process of raising funds gets failed. In the case of IPOs, the SEBI, there is a regulation that SEBI says that there should be minimum 90% of subscribers for your issuing of your security. Again, let me recap the entire example. For example, I am the issuer, I am the company that is issuing or selling my securities or bringing out an IPO, and I am telling people to buy this security. I am telling people to buy this security. The buyers are known as what? The buyers are known as the subscribers. So I want subscribers or buyers. For example, in the case of stock market, SEBI introduced that minimum 90% subscription should be there. If there is no buyers or less than 90%, ultimately it will lead to the cancellation of the entire issue. So you can just imagine how much cost it would be for the entire company. So commissions, so let me complete the story. So for the issue to be successful, for the process to be successful, companies appoint what? Companies appoint underwriters. Let me change the color, red color, yes. So companies, these issuers, they appoint underwriters. They appoint what? They appoint underwriters. That is, in the case if the minimum criteria of buyers does not meet, then the underwriters say that we will buy such securities. तो अल्टीमेटली अंडरराइटर का काम क्या है कि भैया अगर बायर नहीं होगा सामने मिनिमम क्राइटेरिया को पूरा करने के लिए तो हम खरीदेंगे. दैट इज इन सर्टन वे दे आर प्रोवाइडिंग सिक्योरिटीज, they are providing a safety margin for the issuer, and for this they charge commission. So government borrowings, commission to primary land dealers for underwriting government borrowings. So these underwriting in case of government borrowings, government securities, the underwriting commission that is paid is the expense of RBI. So ultimately the money that is coming in, the incomes, different sources, the money that is going out, expenses, expenditure. So ultimately the difference between income and expenditure leads to what? Surplus. So what does the RBI do with the surplus? The RBI surplus is the difference between the income and expenditure. The RBI's total expenditure is only about 1/7 of its total net income. How wonderful it may be that if, for example, it is 7 crore income, then what they are saying is the expenditure would be 1/7, that is only 1 crore. So ultimately 6 crores are the RBI surplus. If the income is 7 crore, the expenditure they are highlighting is 1/7, that is only 1 crores. Though ultimately the surplus comes out to be 6 crores. You can just imagine how much surplus they are generating. This is 6 crores. So what does the RBI do? What does the RBI do with such surplus? That is the 6 crore. What does the RBI do? Retention and distribution. The RBI retains a portion of the surplus as equity capital to maintain credit worthiness and transfer the remainder to the government, that is the central government. The RBI maintains, that is 6 crore. For example, let me make a income statement. The income is, imagine, 7 crores minus the expenditure is 1 crore. The surplus they are generating, they are saying that they split into broadly 2 categories. One, they retain certain part, and the next one is they transfer it to the government. And the government can have the surplus, they can ultimately boost their expenditure or they can expend it. So ultimately it is transferred to the government. Government can use this money to incur expenditure in the economy. So what are the advantages of surplus transfer? That is, let me take the example. For example, they are retaining 2 crore, transferring 4 crore. So what we are talking about here is advantages of surplus transfer. The surplus that they have generated, 4 crores, if they are transferring to the government, that is, the surplus that is transferred to the government, is it a good thing or a bad thing? मैं जो सरप्लस जनरेट कर, मैं आरबीआई हूँ, मैं जो सरप्लस जनरेट कर रहा हूँ, मैं गवर्नमेंट को दूं 4 करोड़ या ना दूं, इट इज गुड और बैड? What are the advantages of doing so? What are the disadvantages? The advantages are public spending, that is the government spending. The government can use the funds for public spending, boosting the demand and economic activities. Just imagine, the government will get extra funds which it can expend on public welfare, which it can expend on building the infrastructure in the economy. Ultimately it will increase the aggregate demand also of the economy. Reduced borrowings. So ultimately what a government, how a government is functioning, the income that is coming in for the government and the expenditure they are incurring. If they are getting excessive income, then ultimately they won't need to borrow money from outsiders. Reduced borrowing. It can help the government reduce planned borrowings, allowing private companies to raise money from the markets and preventing the crowding out of private investment. Very important concept. It is a macroeconomic concept known as crowding out. Let me just take a few minutes and explain you the concept of what? Crowding out. So what happens is, let me elaborate it in such a way that you can understand, you can join all the dots. It is very interesting concepts if you come to it. For example, there is a Reserve Bank of India, there is central government in this particular scenario, there is private sector in this scenario, and there is market in this scenario, correct? All these participants are there. So what is happening is, in today's scenario, if you clearly study it, you will get to know an idea that central government is in deficit. Deficit meaning that government के खर्चे ज़्यादा हैं, income कम है. Government expenditure are more, income are less, ultimately leading to them have to borrow money. From the market. If they have to borrow money from the market, the interest rates would increase because the demand for money is increasing in the market. Just connect the dots. If the central government, that is the government, keeps on expending more and more, it will be financed from borrowings. If they borrow more from the market, it will lead to increase in the interest rates. When the interest rates increase, ultimately the private borrowings, the borrowings that the private sector, the corporates are doing, it will reduce. The borrowings made by the private sector will reduce because they cannot afford such high interest rates. This concept is known as crowding out. That is, the government borrowings have pushed the private sector out of the market. Now, with the help of surplus transfer, when the RBI provides certain amount of surplus to the government, what it can do is, it can reduce the government's deficit and also reduce the borrowings of the government. So what this statement is trying to say is, if the surplus is transferred by the RBI to the government, what it will do is, it will reduce, it can help the government reduce the planned borrowings, allowing private companies to raise the money from the market, preventing crowding out. It will also lead to bank recapitalization. The surplus can be used to recapitalize government owned banks, that is the PSUs, or the government banks, that is the SBI, etc. So ultimately the money, the surplus that is coming in, the surplus can be used to recapitalize, that is, it can strengthen the banking system also. Strengthening the banking system, the surplus can help in strengthening the banking systems. You can also see that there are a lot of NPAs, there are a lot of losses that the government banks are already incurring. So the surplus can be used to strengthen the banking system also. So what are the disadvantages of transferring such surplus? Reduces buffer. It decreases the RBI's buffer against financial shocks and the need to ensure financial stability and market confidence. So surplus is ultimately good. Surplus for any institution or regulator is good, because many times you can see there is financial shocks. For example, let me just put it in such a way that you can connect the dot with today's scenario. In today's scenario, just today only, the stock market of India has crashed tremendously. It was a very, red कहते हैं ना कि red phase था, bleeding. It was bleeding, like all the economy, all the shares, this was down. It may be that in the future we are leading to recession. It can turn out into unstable situation. So in such unstable situations, for example during COVID, it was also financial shock also. No doubt the COVID was a medical or biological problem, but it had its financial effects also. So if the RBI has financial surplus, it can help the economy recover much faster. That is what we are talking about. It also helps in maintaining RBI autonomy. Maintaining sufficient buffers is essential for RBI's autonomy, preventing dependence on government during financial stress. Again, keep in mind the example of COVID. COVID-19 came out of nowhere. In 2019, it was spreading in China, and by 2020, March of 2020, I still remember, the board exams had to be cancelled. Many students of mine had to cancel their papers. Many students of my many of my professional students, the exam got cancelled. It happened overnight. You can just imagine. So ultimately, if the surplus, there is no surplus with RBI, or there is not sufficient amount of surplus with the RBI, what will happen is, it will increase the dependence on the government. during the times of financial stress. Inflation risk, surplus transfers can cause inflation if government spending is not managed properly. Ultimately, another macroeconomic concept is involved over here. So what you're talking about here is, let me explain. If you're talking about Reserve Bank of India or such national level regulatories, you also need to understand the macroeconomics behind it. Without linking the dots, you will not be able to 100% have a grasp on it. अगर आपको कॉन्सेप्ट ढंग से समझना है तो आपको मैक्रो इकोनॉमिक इम्पैक्ट भी समझना पड़ेगा. Aggregate demand is ultimately the sum total of C plus I plus G plus X minus M. For all those students who are non-commerce background or do not have economics, let me just phrase it in such a way that aggregate demand, the demand for the entire country. If we keep on pumping more and more money to the government, just imagine we are providing more and more money to the government. We are providing more and more money to the government. RBI is providing the surplus to the government, correct? That is what we are talking about. RBI is providing the surplus to the government. What government is doing? What ultimately government is expending. Government खर्चा करे जा रही है. So RBI is providing the surplus to the government. Government is increasing the expenditure. What is happening is ultimately increase in expenditure is leading to the aggregate demand in the economy rising. What it leads to? It leads to the increase in inflation. Ultimately महंगाई बढ़ती है. So it may lead to financial inflation risk if it is not managed properly. Next, factors which hamper the government RBI autonomy, government control over the RBI, colonial era provision. Colonial era being the British rule. There are certain provisions from British rule that are still being carried forward, due to which it is saying that the autonomy of RBI is being challenged. It should be an autonomous or meaning independent organization or regulator. But there are certain provisions. For example, the Colonial Era RBI Act 1934 grants the government extensive power to control the Reserve Bank of India. For example, Section 30, Section 58, Section 7, Subsection 1. It allows the government to supersede the RBI Central Board, limits the Central Board's power to manage regulations, permits the Union Government to direct the RBI after consulting with RBI Governor, etc., etc. So these are certain provisions that they are talking about. For examination point of view, you can just have an overview. Let us not get into details of the legal legislative provisions. What is exactly Section 30, what is exactly Section 58, what is subsection 2, this. You can just have an overview that it is saying that RBI is independent. No, it is not completely independent. Government has a lot of control over the RBI. Factors which hamper this, again, influence or RBI governance. The RBI governor, since independence, 7 out of every 10 RBI governors have been former finance ministry officials. That is, they are saying that approximately 70% of the governors of RBI have been in some form the finance ministry officials, raising concerns about RBI's independent functioning. So ultimately, Ministry of Finance, a representative, they are not saying that the process is faulty, but what they are saying is a worthwhile candidate is being ultimately selected from Ministry of Finance to be the governor of RBI. The Central Board of Directors, the highest decision-making body of RBI, has 21 members, correct? With 12 nominated. More than even the majority is being nominated by the union government, giving government significant influence over the RBI's operations. So the day-to-day activities of RBI, a lot of control is with the union or the central government. Lending rules. The government often requests the RBI to ease lending rules under its prompt corrective action framework. This is intended to help MSMEs. What is MSMEs? Micro, small, medium enterprises. and power companies by making credit available, but undermine the RBI's effort to manage non-performing asset crisis. I had a few lectures back explained the concept of NPA to you. Let me explain what they're trying to say. Ultimately, what the government wants is that there should be, apart from other concepts also, there should be economic growth, correct? There should be what? There should be economic growth. To achieve economic growth, the MSMEs, the micro, small, medium enterprises, the small enterprises need to develop, need to grow, and they require money for this. They require finance for this. Usually what happens is these small businesses do not get adequate amount of loans or adequate amount of money from the commercial banks because of the risk of defaults. So the banks usually do not easily provide money to such MSMEs due to the reason of it might lead to defaults and might increase the non-performing assets. That is, it might hamper the quality of assets of the bank. अब मान लीजिए मैं बैंक हूँ, आप MSME हैं, आप छोटी कंपनी हैं, मैं आपको लोन देता हूँ, आप डिफॉल्ट कर देते हो, मेरा पैसा तो खराब हो गया ना, मैं कौन हूँ? मैं बैंक हूँ. समझ रहे हैं ये बात? So there are default risks involved with MSMEs, but what government, because government has a control over the Reserve Bank of India to some extent, it can influence the lending rules over here. So what they're trying to say is that the government can influence the RBI, which ultimately monitor and control, supervise the banks to ease out such loans. It will ultimately increase the economic growth, no doubt. MSMEs will get their loan easily, no doubt. But this will have another side effect, that the non-performing assets, that is the quality of assets, quality of loans that the banks are providing will decrease. It will lead to more defaults in the economy. RBI surplus transfer, pressure to increase RBI surplus transfer to the government has also impacted RBI's autonomy. There is one thing that the RBI is generating surplus, and according to their own understanding, they are giving the surplus to the government for their expenditure. That is one thing. But to pressurize the RBI कि भाई मुझे पैसा दो, मुझे surplus चाहिए, government is pressurizing, it will not be justice to the functions of RBI. There are some key facts about RBI. Again, these are the closing slides of this. Sir Osborne Smith was the first governor of RBI 1935 to 37. These facts need to be memorized. C.D. Deshmukh was the first Indian to serve as a governor from 1943 to 1949. Former Prime Minister Manmohan Singh ji. So Manmohan Singh ji, he was former not only Prime Minister, also Finance Minister, also served as a governor, RBI governor. RBI emblem, that is a tiger and palm tree. So these facts need to be remembered. You can remember the names of these people. This is only fact based, no much of explanation. RBI is fully owned subsidiaries. So what is a subsidiary? RBI is the holding organization, and there are various small subsidiaries. Depository Insurance Credit Guarantee Corporation, Bharatiya Reserve Bank Note Mudran Private Limited, etc., etc. So you need to memorize such facts. Next, currency note printing presses. So where are the currency note printing? You have studied the functions of RBI, that is the RBI has autonomy on printing of notes. But ये printing होती कहाँ पे है? Currency notes are printed in 4 locations across India, that is Nasik, Maharashtra, Dewas, Madhya Pradesh, Mysore, Karnataka, Salboni, West Bengal. Nasik and Dewas presses are owned by the government of India. So these presses where printing of money take place, it is owned by the government of India. The other two, Mysore and Salboni, these two presses are owned by the Reserve Bank of India through subsidiary BRBNMPL, that is this one. इनके नाम याद कर लेना बच्चों. These names have to be memorized. Mysore and Salboni presses are owned by the Reserve Bank of India. So ultimately, the printing press where money is printed is very important. Ultimately owned by other. There are 4 locations. 2 are owned by the central government. 2 are owned by RBI, not directly but through the subsidiaries. Other some key facts: coin mints. Coins are minted in 4 locations: Mumbai, Hyderabad, Kolkata, Noida. My God, my city, Noida. नोएडा के अंदर प्रिंटिंग हो रही है भैया कॉइन की. All coins minted are owned by the government of India. Denomination limits: according to Indian Coinage Act 1906, coins can be issued up to a denomination of 1000 rupees. RBI Act 1934 allows for currency notes to be issued up to the denomination of 10,000. Next, another fact is 1 rupee note is unique because it bears the signature of Finance Secretary of Government of India. All other currency notes bear the signature of RBI Governor. So these are certain facts, and thank you so much. I think so with this we come to the end of this session. Thank you so much. Bye bye until we meet in the next session. Bye bye, all the very best and take care. Thank you so much.